Secured credit cards are often used to build positive marks on your credit report. These credit cards are designed for individuals with a less than perfect credit history. They offer guaranteed approval, and this credit card will report monthly to all three major credit bureaus. Your secured credit card will be issued as a Visa or MasterCard and can be used wherever you see that credit card logo displayed. What is a secured credit card? These credit cards are just like unsecured credit cards in that you'll be responsible for making monthly payments and are going to be charged an interest rate or APR. The big difference is with these credit cards, you must make an initial deposit with the bank that issues you your secured credit card. This deposit is fully refundable as long as you comply and don't default or stop making your monthly payments. The deposit is typically between $200 and $5,000. It is FDIC insured, and depending on which credit card you go with, you may be able to earn interest on your deposit. If you are applying for a secured credit card because you want to reestablish your credit history, there are two important things you should know. One, while it is important to build positive items, if you neglect to remove the bad, negative credit marks on your credit report, you'll not be able to achieve a really good score. Instead, you must focus on both these aspects. The negative items are what is damaging your credit score, and without removing them, it won't matter how many good credit items you have, you'll still be seen as a high risk by potential lenders. Number two, make sure to shop around and read the fine print. Most of these credit cards will be a real Visa or MasterCard and will report to all three credit bureaus. However, as in any business, and especially those serving a vulnerable section of the population, some companies will prey on uninformed consumers. We have heard from individuals applying for a secured credit card and having to pay steep annual fees, high interest rates, and the credit card didn't report to any of the credit bureaus. On a side note, aim at keeping your monthly balance at about 30% of your credit limit. This shows that you use your credit but are using it responsibly, and by having available and unused credit, your score should see a bump. Best secured credit card. The best secured credit card offer is not going to charge you an annual fee. You should expect to pay roughly 10% APR. After all, your account is secured and the bank isn't really taking any risks by extending you a credit card. Thus, you should expect a low and reasonable interest rate. Further, it will report to all three major credit bureaus. Just paying your monthly bill on time will start to create a trail of positive payment history on your credit report. The experts claim your payment history is weighted up to 40% when your credit score is calculated. In other words, it is a very important piece of this information. Additionally, it would be wise to see what other secured credit card holders say about their experience with that particular credit card. However, take these reviews with a grain of salt because there are negative reviews about every product and service ever delivered. Look at a few reviews so you have a better idea of what most card holders have experienced. Additionally, make sure your account is FDIC insured and that your secured credit card will be issued as a Visa or MasterCard. These secured credit cards work just like an unsecured credit card, and you'll be the only one that knows your credit card is secured. Lastly, it would be a good idea to see how long the bank or credit card issuer has been in business. There has been a dramatic change in the landscape of credit cards for bad credit, and new credit cards are beginning to reemerge with little research known about them. We would encourage you to stick with a credit card that has been in business for quite a long history and has survived our recent economic turmoil. Credit cards.